Okay, we'll try and connect with him in a bit, but let me for now welcome on board Krishna Singhavi, who's joining us on the show right now. He's of course joining us to talk to us about the fundamentals. He's the CIO equity at Mahindra Manulife. Hi Krishna, good to be speaking with you. Wishing you a very happy new year. And is it going to be a happy new year for the investors right here in India?
Yeah, hi. Yeah, wish you and all your viewers healthy and a wealthy new year. Yes, I think as long as economy keeps on doing what it is doing in terms of growth path, yeah, investors will have a happy new year. Only best part which we should remember really is it's not really a new year. Linearity on returns doesn't come, let's say, in equity markets. So to that extent, little bit ups and downs and volatile times, what goes through markets, we have to appreciate, maybe enjoy, because that's the time one can actually buy more. When markets are not so much on the up move, you can actually buy more, do your investments. But net growth path is visible for India, and so is wealth creation opportunity.
Hi Krishna, this is Shrishti also joining in, wishing you a very happy new year to you and your team. But help us understand which are the big themes that you are tracking for 2025?
Yeah. So Srishti, so there are two ways to look at markets, right? One is what's happening maybe globally, which can determine what macro changes can happen. One of the big thing which we should be aware and monitoring is change of presidency in US. Mr. Trump is going to be back in White House somewhere in 20th of January, and policy changes do happen when the leadership changes. That's been our experience, whether it's corporate world or politics. So one thing is monitor the changes. Luckily, the campaign has conveyed whatever they want to implement in the presidency term. So we'll monitor them for those changes on either geopolitics or tariffs, or how US fiscal policy plays out, because that is its shows nice interconnect to US monetary policy, which is about rate cut path, etc. That's one way. This is global linkage. Come to India, yes, clearly how economy picks up, as we saw. CY24 is more like FY 25 first half was little bit of a slow from a government spend. We had the election cycle, and as usual, spending does take a little bit of a backseat in the election period. So what one should look out for going ahead is how the government spend picks up in Q4 FY25 and onwards, because that's some space of market, some space of economy rather, which is going to help out the growth being back on traction.
I guess that spend is necessary to kind of spur the overall consumption. But what's your sense on pharma as a sector, Krishna? Because of late that has done well. In fact, one of the best performing sectors in the year gone by. Do you expect it to continue in this year, or do you think there might be a bit of a moderation of sorts?
So if pharma as a sector, has its own intricacies in terms of, some companies tracking global markets more so, US market as a customer, they service those. Some Indian companies are into, research orientation, and other way around. Indian population makes one of the largest, a pharma market in India from a pure domestic consumption. So in a way, pharma captures the entire story of outsourcing, research-led, innovation stroke India consumption. So one does expect, yeah, pharma to do well. The only challenge in Indian markets right now is that markets, are being driven more on a shorter-term trend. So to that extent, sector rotations are happening quite fast. So the frequency, of this sector rotation does influence near-term returns. But yeah, structurally, pharma is a as interesting sector in India as quite a few others.
Like pharma at this point in time, but Krishna, off late, the weaker earning season has been weighing heavy on the markets, and especially on some of the sectors there. So going ahead, as we start Q3 earning season as well as Q4, what is the outlook, and any sector that you wish to highlight where the pressure in the earnings can persist?
Yeah, I think the first half was weak across sectors. Maybe a little bit outside India facing sectors fared relatively better because their underlying customers maybe in US or more so for IT. But yeah, net that was a beneficiary sector. Coming to third quarter, essentially one needs to really monitor for the consumption sector pickup. Festive season is what we had in October, November, and to that extent, the sales of consumer companies is what you like to track, and sales as well as margin uptake, if at all any. Broader trend in India has been that earnings are more led by margin expansion over last 4-5 quarters, and to that extent, one would like to monitor for volume growth pick up in the Indian context, because that's a space which can really contribute more to earning. We would like to see more of volume led growth in earnings rather than margin led, and that can be a nice thing to track. Sector wise, again, within each sector we are seeing nice divergence across companies, where within same sector there are 2-3 companies, let's say, growing pretty fast, couple of them having their own issues or near term challenges on growth. A little bit difficult right now to focus only on sectors to have a part of investment strategy. Better to look at stocks and which companies are faring well on their own underlying business, and maybe valuations are attractive. That can make a nice portfolio construct for us.
Yes, it is going to be very, very stock specific and a bottoms up kind of market. And that is how actually 2024 also panned out. And looks like 2025 is going to be no different to that as regards. But separately, what about the entire, capital goods and the defense and all of those sectors? Because whether it was the banking, public sector names or the industrials, all of them had seen a massive re-rating, including oil and gas, etc. Do you think the bulk of the re-rating is behind and now it will be status quo, or do you still see some value unlocking and potential re-rating in some of these names?
Yeah, for many of these companies, the re-rating was partly, created by improved outlook on the underlying growth. So if you look at cap goods, we got, nice lease of life where, variables like PLI came into play, which made Indian companies as well as FDI come and invest into India to have an end product, which is basically going to serve either Indian customers or a global market through import substitution or exports. So moment there's this new capex cycle starts, yeah, capital goods companies do benefit, and maybe oil and gas is one more angle where, or even the power utilities, where any manufacturing activity in India will in turn require its own ecosystem of those factors of production, whether it's electricity, whether it's power and fuel. We had a nice, re-rating led uh, stock price appreciation for many of these companies, and now maybe it's time to monitor how those earnings do flow. Within the earnings space, one specific thing I would possibly mention is there are some companies, which are actually gaining a much faster market share when they are into this PLI, beneficiaries, where they don't really have to worry about creating an underlying demand. So if it's an import substitution product being brought into by government under PLI, the domestic manufacturer has a nice advantage of saying that I already have the established market. I just have to replace an existing imported component by domestic production. So to that extent, PLI beneficiaries in a way are helping their own growth path much faster, because they don't have to worry about demand creation. It's just a replacement of demand, and those factor is something we are seeing across the space out there.
Okay, Krishna, on that note, we let you go. Thanks so much for making time and speaking with us today. But as we were discussing a little while ago, it's the entire fertilizer pack which is fairly active on the expectation of a cabinet decision. Let me take it across to my colleague Prakash to get more details on this one. Hi, Prakash.
If you like this video, then like, share and subscribe to ET Now.